Welcome back and thank you for checking out another episode here on McHugh Insurance Group's YouTube channel. As a follow-up from our last video, which if you didn't see, go back and watch it. We discussed all of the factors that go into what impacts your overall insurance rates for your auto insurance. Today, as a follow-up, I want to discuss all of the things that may go into determining your homeowner's insurance costs, all of the different factors that play into your overall rate. As I mentioned in the previous video, all the time I hear, hey, well, my neighbor has his insurance through such and it's half as much, or my neighbor has insurance with the same company I do, but it's twice as much, whatever it may be. No two insurance policies, no two quotes are the same, because if you would have seen in our last episode, there are 30 to 40 different factors going into it that don't even take into account each individual insurance company's appetite and overall rates. So when we talk about, and again, we'll go through these really quick, and then at the end, I'll highlight some of the ones that to me are having the biggest impact that people don't think about. But all of the things that may have an impact on your overall homeowner's insurance premiums, okay? So the first piece we'll talk about is going to be your location, okay? Right now, there's a handful of things that play into this that are making it such a big piece, but the geography piece is looked at in a handful of ways. Do you live in a safe neighborhood? Do you live in a neighborhood or an area of your city, state, country, whatever it may be, that is susceptible to more weather-related claims? Are you close to a coast? Are you close to some sort of body of water, in a flood zone, wildfire-prone areas, whatever it may be? This is where insurance companies are losing their shirt. Not so much here in the northern Delaware area where we're situated, but as you get over to the coast in New Jersey and down towards the beaches here, it definitely has a huge impact. The next piece is the age of your home. When you look at when year your home was built, insurance companies look at that and they say, okay, the older the home, the more likely it is that it needs updates that may not have been done, and therefore it's more likely that it's going to have some sort of claims down the road. Okay, it's like gambling for these insurance companies. Remember that. The construction materials. So one of the bigger things is, what is your house built of? Okay, think, oh man, what's the fairy tale story where, you know, there was a house built out of hay and one out of brick and one out of wood, whatever it may be, right? And then the big bad wolf, that's it. And how easy it is for there to be damage to your house. A house made purely out of brick is going to be much more stable and protected than a home that may just be a frame building. But at the same time, it would cost more to rebuild that home that's made purely out of brick. Okay? So depending on how you're looking at it, it's going to impact your rates. The value of your home, right? Taking into account your square footage, how big your home is, how modernized it is. What would that sell for? Now remember, the replacement cost for your home and the price you could sell it for, two totally different things. So don't confuse them, but understand just the overall value of your home as that's looked at has an impact on your rates. This piece, number one piece right now, is the roof condition. Insurance companies get killed when there's a minor hailstorm in an area, and then the next day, next week, you see nothing but roofing companies hanging signs and knocking on doors, offering to get you a new roof, and your insurance company pay for it because they've done it for so long and it's worked, and insurance companies have taken a bath over it, and now they are trying to make sure they are positioned better. So if you have a roof right now that's 15 years or older, it's going to be something that either insurance companies are going to say we don't want, or they're going to charge the appropriate premiums for it. Safety features. Do you have fire alarms, burglar alarms? We do a lot of stuff with higher net worth individuals. Those central burglar and fire alarms end up providing great discounts, obviously, and they make your home that much safer. Okay. Along those lines, home renovations. So let's say you have a house that was built 100 years ago, but you've had renovations done and the major things that they're looking at, the electric, the plumbing, and the HVAC. Obviously, we talked about the roof. Any updates to those, whether partial or complete, will allow you to have a better rate for your homeowner's premiums, okay? The policy details, obviously, goes without being said, but the amount of coverage that you have, the deductibles that you have, like I mentioned in the auto insurance video, the more skin you have in the game, the better risk you are for an insurance company, the more likely they're going to be to offer you better rates, okay? And then, of course, your claims history. If you've had prior claims, whether at your current house or a previous house, and typically in the last 3 to 5 years, it's going to impact your rates. If you've been claim-free, then by all means, you're going to get a better rate than somebody who's had something going on. That goes without being said. Another piece I mentioned in the last video, your credit score. People with bad credit scores that these insurance companies have the ability to soft pull are going to get worse rates because there is a higher likelihood of them not paying their premiums than somebody with a good, with a good credit score. Your occupation, depending on what you do for work, believe it or not, has an impact on your insurance rates. Your marital status. Somebody who's married, as I've previously mentioned, is going to be looked at as more stable. If it's a house with a family in it, it is likely that they are more stable than a single individual. I will let you argue with the insurance companies all day about that. I'm just sharing the information with you, okay? The age of the homeowner, okay? Especially if you're somebody who's super young buying a home for the first time, that may negatively impact you. But as you start to get more of an insurance history under your belt, you will likely have the opportunity to reap the benefits of better rates. And then pets. This one is huge. Each state is different, but there are certain carriers who will not insure your home depending on the type of dog you have. Okay? And listen, like I said, do not shoot the messenger. I'm just telling you, we've seen it over and over again. There are certain dog breed mixes that are unacceptable or are going to see a big surcharge for your homeowner's insurance premium, okay? A few more just to fly through. Obviously, when we just think about your overall risk, houses that have swimming pools, houses that have trampolines, it's a higher risk of somebody getting injured on your property. You're going to pay more for that insurance, okay? If you're, like I mentioned earlier, from a geographical perspective, in a flood area, if you're in a coastal area, that is going to impact your premiums. You're going to pay more than somebody who may live inland by 20, 30 miles, okay? And then the last couple here I want to mention, multi-policy discounts. If you own a home and you own a vehicle, if you can place both of those policies with the same company, that will save you a ton of money in the long run. And then again, I cannot stress this enough. If you have a good claims history, regardless of the location, whether it be your current house or previous addresses, that is going to help you get better rates. And I say that 3 or 4 times in this video to say this. Be smart about which claims you submit. The $15,000, $20,000, $50,000 claims, send those in all day. The $250, $500 claims, if you can afford to, pay them out of pocket. Otherwise, you're just going to pay it twice over in your premium increases. Okay? And to put a bow on this, as I mentioned, the 3 biggest ones to me when it comes to your homeowner's insurance and what's impacting your rates. Number 1 is home renovations, and that includes your roof. Be very transparent with your agent and your insurance company so that they know that you've brought your home up to date. And to beat a dead horse, number 2 is going to be your credit score. Understand, if you have a bad credit score, it is without a doubt having an impact on your overall rates. Okay? And then lastly, I just touched on this, the multi-policy discount. If you have a home and vehicles, the best thing you can do, the most cost-effective thing you can do is to place them both with the same company and take advantage of those multi-policy discounts. That's all for today. Stay tuned. If you didn't have a chance to see the video of me breaking down what affects the auto rates, go back and check that one out and keep these in mind moving forward as you're buying your insurance to at least help you get a better understanding of where your rates are coming from. Thanks for checking out another video. Be sure to like and subscribe and follow along for more.